Yeah, hello and welcome to another update video about HBAR. So HBAR dipped below the 78.6 retracement level at 4.9 cents. That in itself is not a major problem. The problem is that HBAR hasn't really started to recover. We had a bit of a reaction to the 88.7 fib level and we're holding above it, but it's not really a bullish reaction. So we're going to talk about that in a minute. I'm still looking here at a possible 1-2 setup, but I'm actually at the moment preferring the idea that it will make another bear market low. The reason for that is that it dipped below the 78.6 retracement. So unless it can convince me that something bullish is going on, I'm preferring another bear market low. Not in terms of I want it, but from an analysis point of view, because I simply know that any chart that drops and sustains below the 78.6 fib level, and it does sustain below it, that these 1-2 setups typically do not work out. Of course, it still can, okay, but it would really need to rally now. If it makes one more low, then I think this bullish interpretation, is completely gone, because that new low will take it below 4 cents, and if it makes one more low, then the bearish interpretation would be supported. And it will go to new bear market lows with sort of an uncertain outcome then eventually, because it would be quite bearish. What would be the bearish count, people will ask? Well, ABC to the upside here, or WXY, and then a wave 1 to the downside, a wave 2 to the upside. This would be a wave 3 to the downside. This could all be an ending diagonal, so the subwaves as 3 waves, then a wave 4 and a wave 5, yeah. So, but even here, it would be fairly close to the end of the bear market and might make one more low. But the problem is with one more low, it's sort of uncertain, in terms of the long-term outlook, right? Because that means it hasn't bottomed and it hasn't shown as an impulse to the upside. And yeah, it will make it quite bearish. So, but if it's going to be something, if this is a 1-2 setup, the low should already be in. Yeah, so I've got an ABC structure here with the C wave being an ending diagonal. The low could be in, but the problem I have with this is that it came down too low. We can count the correction complete actually. So if I say, okay, we topped here in a B wave, that was back in April, came down in a 5-wave move and an ending diagonal in a C wave, and it could have bottomed. So we had a bit of a surge down here, and this could be a leading diagonal in a wave 1. And a pullback in a wave 2. But to confirm that, it would need to break above that 4.8 cent level now, break above the trend channel, yeah, and then we have something potentially bullish here. A wave 1 to the upside, a wave 2 to the downside, and then take off. But this needs to hold, this low, 4.2 cents. Just off this move, can see that it did hold actually the 78.6 retracement. So, I have some hope here, but I can't really confirm that a turnaround is happening until I see a break above the wave 1 high. That would be at 4.8 cents. And then eventually what we need to see is a 5-wave move to the upside and a subsequent 3-wave pullback. But yeah, a bit uncertain. This could also just become a triangle, right? And make one more low. And then, we get to the below 4 cent level. And then it risks invalidating the bullish count. So this is one where we have potential that it has bottomed. Probabilities are, I would say, okay, not low, but probabilities for a bullish scenario have reduced just purely based on the fact that it broke below the 78.6 retracement. But there is a potentially promising reversal here, but it would need to be a diagonal pattern. So again, it's limited reliability, but I'm observing this. But I can tell you that one more lower low below the 4 cent level will probably drive it to new bear market lows. Okay, that's my update about HBAR. Hope you liked the update. If you did, please hit the like button, leave a comment and subscribe. And if you really like the content, then please check out the channel membership. Thanks a lot for watching. Bye bye.